So, what happens when you've got this storm of global fear crashing into a market that's just buzzing with local confidence? Well, this past week, we got our answer. It was this incredible tug of war that really shook up the Indian stock market. So, let's dive in and break it all down.
Yeah, this past week was a big one. It was actually the worst week for Indian markets in about 3 months. It really felt like the floor just dropped out from under us? So the big question on everyone's mind is, what on earth just happened?
All right, so before we can even get to the why, we really have to wrap our heads around the what. Just how big was this drop? And let me tell you, when you look at the charts, it was just a sea of red everywhere.
Okay, here's the number that really grabbed all the headlines. A drop of about 2.5%. We're talking about the Sensex, one of our main indices, falling that much in just 5 days. Now, a drop that sharp, that's not just noise. That's a huge signal that something significant is shifting under the surface.
And look, this wasn't just a problem for the big blue-chip companies. Nope, the sell-off was felt everywhere. In fact, it hit the smaller stocks even harder. You can see the mid-caps were down about 3%, and the small caps took a real beating, down almost 4%. That right there tells you this was a widespread shift in mood, not just a problem with a handful of big names.
Okay, so you've seen what happened. Now for the million-dollar question, why? Where did all this pessimism come from so suddenly? Well, the first big clues actually point outside of India. We're looking at this cocktail of global worries that got international investors really spooked.
It really boiled down to three main things. First up, you had these growing fears about U.S. tariffs, which throws a whole lot of uncertainty into global trade. Then, the U.S. Federal Reserve kind of hinted that they weren't going to be cutting interest rates as much as people hoped. That basically means the era of easy money could be coming to an end. And on top of all that, you've got rising tensions in the Middle East, adding that layer of geopolitical risk. When you mix all that together, big global investors have a simple playbook: sell first, ask questions later.
And here's where you can see that sell-first playbook in action. Foreign investors, the FIIs, they pulled out a massive 8,500 crore rupees, just sold it off. But here's the fascinating part. On the flip side, our own domestic investors, we're talking about our mutual funds, our insurance companies, they didn't run. They stepped in and bought almost double that, over 16,000 crore. This was the core battle of the week, right here. Global fear going head-to-head with local confidence.
So while our domestic funds were busy buying up what the foreign investors were selling, another major player on the home team was making some big moves behind the scenes. And that was, of course, the country's central bank.
Yep, the Reserve Bank of India, the RBI. For anyone who might not know, think of them as the ultimate guardian of India's economy. When things start to get a little shaky or unstable, it's their job to step in and calm things down.
And their big mission this week? To solve a problem called tight liquidity. Now, what does that mean? Well, just think of the whole financial system like a car engine. It needs oil, or in this case, cash, to run smoothly. The RBI basically looked under the hood, saw things were running a little dry, and decided it was time to pour in some more oil. They call it durable liquidity, which is just a fancy way of saying they're injecting a whole lot of cash into the system to make sure everything keeps moving.
So how exactly are they doing that? They laid out a pretty powerful two-step plan. Step 1, they're going to buy up 2 lakh crore worth of government bonds. That's a direct way to pump cash right into the banks. And step 2, they're doing a massive $10 billion currency swap. The goal for both of these is just to make sure there's plenty of cash available. The message from the RBI couldn't be clearer. Don't worry, we've got this. We will provide the support that's needed.
Now, this whole showdown between global fear and local confidence, it didn't just stay in the stock market. Oh no. We saw the ripples spread out and affect other really important things, like gold and the value of the rupee.
First up, gold. And this one's probably not a huge surprise, right? When there's this much uncertainty in the world, investors do what they always do: they run for safety. And gold is the ultimate safe haven, so its price jumped by about 3% as people looked for a safe place to park their money.
And at the same time, remember those geopolitical tensions we talked about in the Middle East? Well, that had a direct impact on oil. Any worry about supply getting disrupted tends to push prices up, and that's exactly what happened. Crude oil climbed more than 2%, which of course just adds another thing for the economy to worry about.
And finally, the rupee. All that money that foreign investors were pulling out, it has a direct impact on our currency. See, when they sell their Indian stocks, they have to swap their rupees back into dollars to take the money home. All that selling of rupees and buying of dollars pushes the rupee's value down, and we saw it slide to around 90-20 to the dollar. It's a textbook case of what happens when foreign capital heads for the exit.
Phew. So, after all that drama, what a week! The big question now is, obviously, what happens next? Where do we go from here? Well, as we look ahead, there are a few really important things you're going to want to keep an eye on.
There are really 4 key things to watch. First, we've got India's inflation data coming out on January 12th. That's going to be a big clue for what the RBI does next. Second, it's the start of earnings season, so we'll get a real look at how healthy India's companies are. Third, we've also got inflation data coming from the US, and that always sets the mood for global markets. And last, but definitely not least, we have to keep watching those foreign investors. Are they going to keep selling, or will they start to come back? That's a huge piece of the puzzle.
And all of this really brings us back to that one central question. This last week was like a massive stress test for the market, wasn't it? It showed us this battle between powerful global headwinds pushing us down and really strong local support holding us up. The story is definitely not over, and the week ahead is going to be the next big chapter, where we find out if that domestic strength is truly enough to keep the market afloat.